Welcome to Smartphone Nation, brought to you by Omidyar Network India. This is a podcast where we talk about how the next half billion are shaping their future online.
The next half billion are the core of this podcast. They represent the second big wave of internet users in India, hence the term next. We define them as the cohort of 500 million first time internet users who have come online via mobile phones in the last 5 years.
From a demographic standpoint, they are mainly from the bottom 60% of India's income distribution. They are owners of small businesses like beauty salons and kirana shops, and also blue collar workers, domestic workers, security guards, etc. They are building a greater comfort with tech and represent the hustle and ambition of an aspiring India.
In today's episode, we're going to look at how Revfin enables independent drivers who operate passenger or cargo electric vehicles for last mile connectivity by providing them with loans. We have the founder and CEO Sameer Aggarwal with us today to talk about his story of impact. Okay, hi Sameer. Welcome to Smartphone Nation and thank you for taking your time out to be here with us today.
Hi, how are you doing? Thank
I'm
you for
fine, thanks. It's nice to meet you. And, because we want to begin with what Refin does for people who are not familiar with Refin, would you like to begin by explaining to us what you do at Refin?
Sure, absolutely. So Revfin is an electric vehicle focused financing company.
Hmm.
We've been in operation since 2018, and we have so far financed nearly 50,000 electric vehicles in 23 states across India. We tend to focus on commercial electric vehicles, but we work across various forms of vehicles, so two-wheelers, three-wheelers, four-wheelers. We've also now started financing batteries and charging infrastructure, so trying to basically capture the entire electric vehicle ecosystem. We are a very technology oriented organization. So we use a lot of technology for underwriting our loans and post underwriting loans. Also, we track all the vehicles that we finance through telematics and use a lot of that information, a lot of that data to make ongoing decisions.
That's great. So that's very interesting that you chose electric vehicles, as a specific sector because it's a new sector in itself. What is it that inspired you to, or what led you to finding the gap in this specific sector, and how did you go about conceptualizing Refin?
Yeah, so we did not start with electric vehicles. When we started, the main objective was to focus on financial inclusion. And as we were working on our go-to-market strategy, we actually also looked at electric vehicles as one of the segments we wanted to work with. Um, and this is obviously going back to 2018. At that time, electric vehicles was not really being spoken about. And also, from a scale perspective, electric vehicles were restricted to electric three-wheelers, or more specifically, low-speed three-wheelers, also known as e-rickshaws. So that's the first segment that we picked up. And what we really liked in the segment was, firstly, there was this huge demand for last mile mobility for passengers in India that was being unmet, especially in small town India. And the options for of public transportation being available was very, very limited. And electric rickshaws really came to the rescue. These are essentially low cost three wheelers. They cost less than $2,000 and they move around at low speeds. So they actually were a perfect fit for last mile mobility and also for small towns for people to move around. So there was a huge demand. Now, this huge demand was leading to a huge income generation opportunity for the drivers that were buying these vehicles. And what we found was that there were nearly 2 million such vehicles in India in 2018 without any structured form of finance being available. It was very interesting that there were so many vehicles without finance being available. Uh, and when we looked deeper, we found that the drivers who were driving these vehicles, because of the demand for their vehicles, they were earning about 2 to 3 times of what they could actually otherwise earn. So in a small town like India, they were earning 25, 30,000 rupees a month, which is quite a high income for small tier 2, tier 3 towns, right? And the customer that was buying these vehicles was completely financially excluded. They were people with very low level of education, living in small towns, with no credit history, with no banking transactions. So this customer segment was also the kind of segment we wanted to work with. And we realized that there was a huge opportunity in the electric vehicle space where we knew that the segment is going to scale There was no structured financing available, so we knew there was an opportunity for us to come and help shape that market as well and scale the market. And because of the income opportunity for the drivers, we also knew that there was very low risk with this segment, because drivers wanted to hold on to their vehicles. So long as they were earning the kind of money they were earning, they would continue to repay their installments as well. Right. So it seemed like a good sort of a model to start with, where there was scale and there was risk mitigation built in.
Right. This the whole business model. It is so impact driven from the beginning, and I'm sure you must have been through a series of successes and failures while you were running this business from the beginning to the end. Now, can you take us through like a specific, story that comes to mind when you think about your journey at Revfin and how success and failure has evolved for you as an entrepreneur?
Yeah, I'll probably talk about two. I'll probably give you two anecdotes that really define how we started. On the day that we launched, I was actually sitting in a small town in Rajasthan, where we were sitting at a electric vehicle dealership, and we have a completely digital process, right? So on the way, we were basically testing our app to see if everything was working. We were on the phone constantly with our tech team to make sure there's no issues with the app and so on and so forth. When we reached the town and the dealership, we realized everybody over there was using a feature phone, right? So there were no smartphones, and nobody could speak English, and it was in the center of a town where I wouldn't say it was a very affluent kind of a population, right? So we were sitting there and we sat there all day, and there was not one person who walked into the dealership. And we knew even if somebody did walk in, they'll walk in with a feature phone. So really, the whole concept of using digital platform and app-driven underwriting and all of those things would perhaps not work. So we were just sat all day over there, feeling quite disappointed that we've chosen the path that we've chosen. Um, right. So and we had to spend 2 days over there, but we decided there was no point in staying back. So we actually came back, started our journey back to Delhi. And something very interesting happened on our way back. We got a call from another dealer from another town in Punjab, and he said, "You know what? I have a customer over here, and we would like to take them through your app journey. Should we do that?" I said, "Yes, please go ahead. If you can do it, please do it." And 15 minutes later, they called again and they said, "You know what? We've done it." So, "What do you mean you've done it?" He said, "We've downloaded the app. The journey is done. The customer got approved. What's next?" And we were shocked. We said, "Okay, that's great." Why that was great was obviously because somebody had downloaded the app, applied for a loan again in a small town in Punjab, and the best thing was they didn't even call us once to understand how to navigate the journey on the app. Right? So you're like, okay, maybe it was not such a bad decision. Yes, there will be challenges introducing technology to that customer segment, but if we can break through that initial barrier, then perhaps we can really scale this. And with that speed, 15, 20 minutes, if it takes to complete the entire loan journey, it would be quite a success. Right? So that's how it started. And now moving on to my next little anecdote. We were in a small town in Haryana, and I met a customer over there. So I was just chatting with him and asked him, "So, what have you been doing and how long have you been driving?" And he said, "You know what? Uh, I've recently bought this e-rickshaw, and I'm quite happy. I'm making good money." I said, "Yeah, but what was your story before this? Where did you start from?" He said, "I was a barber. I used to sit in the market every day, and whatever money I used to earn being a barber, I used to spend in the day. Right? So there was no savings." He said, "I had two small children. I couldn't send them to school, right? And basically, they were very, very poor people." He says, "But since I've taken this e-rickshaw, which was financed through your loan," he says, "I've been earning 700-800 rupees a day." Uh, and he says, "I really think of it like this, that I spend 300 rupees a day. I keep 300 rupees to pay your installments. And whatever else remains, I put it in a savings." And he says, "Now we actually have savings. Kids are going to school, so there's a huge impact on our lives." Right? I think so. For me, from the first day, with a lot of disappointment, to actually listening to customer stories where we could see the impact in their lives, it was very, very heartening, and that really gave us a lot of motivation to kind of continue building on this.
Both of them are such heartwarming stories, especially the first anecdote when you're talking about how the failure kind of led to a success in itself. Like when you thought, this was a problem, it just solved itself, with just the kindness of a person's heart, I guess. Like, oh, this is something we can solve here.
And something very interesting. In our 5 years, we've never had anybody call us to ask us how to navigate the app, right? So people are actually willing to do it. They are going through that self-learning process, right? Because they see value in that whole sort of digital journey.
That's so great because that's what the internet and smartphones do, right? It gives you the opportunity to self-learn or, ask the next person to find out what you're supposed to do. And it's like a dominoes effect where everybody just learns how to do it.
I'll give you one more interesting insight.
Mhm.
Most of our customers use smartphones as landlines, which means they have one smartphone at home, but anybody who goes out carries a feature phone. And for them, basically, to actually get their first loan through us, that too through a digital medium, I think is just quite unbelievable for them. And it's really life changing for them. Even that whole experience of getting a loan is life changing for them.
Yeah, would you say that people are unaware of the 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 concept of credit or loans before they come to you and are
Absolutely.
surprised to know?
Absolutely. So for most of our customers, almost 80% of the customers are taking their first loan from us. And it's not just them. No one in their families have also ever taken loans. Um, and if they have taken loans, they've been from local money sharks. So they've taken loans in cash at a very high interest rate. So, and they have no sort of credit footprint and so on and so forth. So for them actually to come and take a loan, their first sort of formal loan at reasonable rates through a very structured process, it's a very different experience for them.
Yeah, and I'm sure since you mentioned, they have borrowed from loan sharks before, do you find that they have a certain hesitation before they take a loan, and do you have to convince them or tell them that this is a more direct process?
So we don't have to convince them because I think they understand ultimately that they will need to take a loan. They also understand that the product we're offering is much lower interest than what the local money shark would offer. So from that perspective, I think they're good. But there is still the element of trust that is missing. So if we call our customer and we want to speak to them, they are still a little unsure. They say, okay, let me just check if I can speak to you. Right? Because if we tell them, hey, you know what, we have some incentive for you as an example. We'll give you 100 rupees in your bank account if you do XYZ. Hmm? As an example, if you pay your installment through a bank account, we'll credit some money into your account as an incentive. And they say, hey, we're not sure about this. We're not sure we want that money because you could be a scamster. Right? So I think there is still that element of mistrust with in the society, and people are not always don't know how always to interact with your lender as well, right? So I think that element is still missing, and a lot more needs to be done by us and others in the industry to actually make that process much smoother.
Yeah, I'm sure a lot of even all of us, we're like very apprehensive about about like phone calls we get about any kind of investments and everything.
Yes,
We're scared to get scammed, so that's a very
absolutely.
common experience. Yeah, I'd like to pass it over to Utsav to talk about impact. Utsav, you can take it over.
Yeah, just first of all, super impressed by a 20-minute chat, right? I mean, this is a country where people are used to waiting like 4 hours, 5 hours, even a day, just to get a two-wheeler loan, right? 20 minutes is insane, and that too for people who don't have credit scores. I think one of the things which really struck me, talking about the customer segment, right? Tier two, tier three towns mostly would not have stable incomes or have incomes which are very seasonal in nature, right? And I mean, the way I was thinking about it is that the e-rickshaw example you gave, right? Now that person and his children probably will escape what is we call intergenerational poverty, right? Because you said that nobody in their family has taken loan, and uh, I just want to talk about maybe a couple of aspects of this. One is the psychological impact which you create, right? The fact that people think, "Arey, I am credit worthy," that I can be given a loan. Can you just talk to me a little about that? Because I'm sure that this would have come up in some form or the other during your journey.
Yeah, it's interesting actually you bring that up. As an organization, we experience very low level of defaults from customers. And there are many reasons for that. But one of the main reasons for that is pride. Our customer, when they take a loan from us, what happens is, as I said earlier, their income goes up by 2.5 times. A person living in a tier 3 town earning 25,000 rupees a month goes really from being a low income earner to probably a middle income earner or a middle class person at 25, 30,000 rupees. At the same time, they have a formal credit, so they've got a credit history, they've got a CIBIL footprint, etc. They've taken a loan digitally. They have become asset owners for the first time in their lives. They own an asset, a vehicle. All of these things combined actually lead to a very high sense of pride because now they within their community they are richer than most people. They have assets, right? So they have a life and a lifestyle that is far superior to a what they had a few months back, but also compared to their other peer group and their other family members or people in their communities, and that becomes extremely crucial. On the other hand, on the flip side, what we see is a lot of people also don't want to default on their loans because they don't want debt collectors coming to their homes, right? Because obviously they're proud people now and they don't want people coming in and taking assets away, right? So that whole shame aspect is also very prevalent. So pride and shame actually works very well in this business, and we actually see that a lot with our customers.
Right. And I also imagine there is a bit of gratitude as well, right? Because you become the first touch point for them who says that, we believe in your aspirations and we are willing to sort of, go out on a limb and give you a loan where traditional credit lines may not be, sort of available to them. So, that is what a psychological impact is, right? Are there any other ways in which you think of, impact? And you've been on this journey for a while now. Has your idea of impact also evolved with time?
So when we started, the main sort of impact we wanted to create was on financial inclusion. That is to give loans to people who don't get loans from financial institutions. Therefore, the first metric that we thought of tracking is how many of our customers are financially excluded. Okay, so and just to give you some numbers, roughly about 85% of our customers were financially excluded, right? Which means they had no credit history, taking first loan, very low level of income, no banking transactions, and those kind of things. So 85% and that 85% of customers are financially excluded. So that's the first thing. Now we also find that given the underwriting model we follow, uh, a financially excluded customer has a higher likelihood of getting approved. It's very counterintuitive, but that's how we've built our underwriting model, right? So the second thing was what is the approval rate within that segment of customers, and we find it to be quite high. Over time, as we moved on, we started looking at financial inclusion not only from the standpoint of are we giving a loan to them, but also in terms of what is the impact in their lives. So therefore, that translated into measuring their income. Now, income measurement happens in multiple ways. You can either obviously do a customer survey to say, hey, how much do you earn now? How much were you earning previously? But that also happens through two other means. One is obviously it creates an ability for them to repay their loan. And the way we've built our loan structure is that customers' EMI should be, or monthly installment should be roughly 25% of his earnings. Otherwise, it's very difficult to repay. And we have a very good repayment history, right? So we know that the customers are actually earning quite well to be able to give 25% out of that to us. Then there's another way of measuring. We started embedding telematics into all the vehicles that we finance. So we actually know how much drivers drive every day. Our drivers roughly on average drive 68 kilometers a day. Through our on-ground surveys, we know that a driver earns between rupees 13 to rupees 23 per kilometer. Even at 13 rupees, that translates into 800 rupees a day, right? So then that became sort of the measurement. How much is he driving? Can we actually push them to drive a little bit more? We actually started a program where we told our customers, you drive 16 kilometers a day for us, right? So if you can drive that 16-kilometer extra, your vehicle is free, right? So we created those kind of programs to see if you could actually increase their income levels as well. Now, so we started with giving a loan, approval rates, tracking change to income, and now obviously electric vehicles, environment, sustainability is really top of mind. So we've also started thinking about what is the impact we are creating on the environment. So we started tracking the overall distance traveled by our drivers, and also how much tailpipe emission saving does that lead to? Right. So that's another metric now we track on a very regular basis. And just for context, our drivers have driven almost 800 million kilometers now. So, and obviously that's over the last 5 years. So that's a very high number. I think that's, and of course, a lot of carbon emissions have been saved. Our own sort of estimate is we've saved over 40,000 tons of carbon emissions so far.
Oh, and I'm an EV owner myself, and that number which my EV company gives me of how much I am saving with what I'm driving is genuinely a good motivator, right? I'm not saying that I'll suddenly start doubling my driving because, of course, it's not a commercial use for me, but I do understand, sort of where that sort of a mindset of, saving, comes from. And of course, in from a operational perspective, EVs would be definitely be cheaper than fuel vehicles for most of these folks, right?
Absolutely.
We spoke of psychological impact, we spoke of impact, of course, to the environment as well. I also want to talk about the impact of someone being a returning customer, right? For a person, and I don't know if it works in your case or not, but they bought one vehicle from you, paid it off, and now they are feeling that okay, I can maybe build a fleet out of it, rent it out to other people who will drive. And any such experiences you have had or seen in your journey?
Yes, so we do actually see a lot of customers actually buying a second vehicle uh, about a year after buying the first vehicle. But what's very interesting is, as I was saying earlier, because now drivers are earning a little bit more, they're able to save a lot more money. They don't always need another loan to buy that second vehicle, right? So a lot of we've seen a lot of drivers who buy the second vehicle cash down. They put the old vehicle on rent and then they drive the new one, and that really helps them augment their income.
Right, and actually that's very heartening to hear for the simple reason that well, if you can buy it on your own cash, there's nothing like it, right?
Yes.
Because well, credit does come at a cost, no matter how comfortable that credit option may be. Uh, Now, in all these years, where you are, you've sort of reached a certain stage in terms of. In terms of everything from the number of customers you have served and the number of lives you could have changed, right? How does impact look as an idea for the next 5, 10, 15, 20 decades, years, decades, and so on?
It's a difficult one to answer, but I'll say this. First of all, I genuinely believe that for every startup, um, the main motivation to start has to be social impact. You have to use technology and innovation for social impact. Um, Only then do you create really large businesses. And I also think that if there is no social impact associated, then actually you're not solving for much, and you also have no sort of uh, real how should I say, there's no real need for you to come into existence because there are already quite a few established large entities doing businesses in any case, right? So you really have to do something that they are not able to solve for. Right. So that's my starting point. Now, in terms of impact, I think of impact in three ways right now. One is impact on our customer. Like I said, what's the impact on his income, on his credit scores, and how does that improve his future, and so on and so forth. And just very interesting perspective, our customers go from no credit score to a low risk credit score within 4 months of taking a loan from us. That's the average customer, right? Which means that that customer may not come back to us because we've sort of been the first step in the ladder, but actually he's climbing that credit ladder and he's solving a lot of problems for himself and his family. So that's the first impact. Um, the second impact really is on the environment, uh, right? And as I already said, that obviously more the adoption of electric vehicles, more people drive. Um, there's a huge impact on the environment as well. And then there's a third impact, which is sort of a indirect impact, which is on not just the driver, but also people who are riding on those vehicles as passengers, or or if it's a cargo vehicle, if your food or your parcel gets delivered to you in an electric vehicle, that's an indirect impact, right? So now The idea is that we want to change also the last mile mobility behavior of people. So typically, one driver, one vehicle is serving hundreds and thousands of customers over a year, right? So last mile mobility behavior for all of them have changed. So actually, all of them are contributing to that reduction in carbon footprint as well, right? So that's the third sort of indirect impact that we see.
Right. No, no, and that makes so much sense because I think the indirect impact often gets missed out because it's not something which comes to mind immediately. But I can see where you're coming from, because the more we are able to adopt EVs into our ecosystem, and that means not just for personal use but also in our supply chain logistics of moving points from A to B, or even last mile delivery for that matter. I can see the impact. Sameer, thank you so much, for this conversation, because I think we didn't think of so many aspects of impact. I mean, we of course thought of very narrow impact of, oh, this person earns more. I think that was all the lens sort of we had when we came in. But this has been really, really insightful. Thank you so much for making time for this.
Sure, thank you.
Thanks.